Thanks for joining us on the news at 1. Let's take a look at your market news now. Asian stocks slipped today across the board as various factors, including weaker metals prices and monetary policy concerns in China, soured investor risk sentiment. Sentiment was also bruised by the news that US President Donald Trump will recognize Jerusalem as Israel's capital, a move that is feared could fuel violence in the Middle East. Japan's Nikkei posted its biggest fall in 8.5 months as investors rushed to lock in gains after the index broke below the key technical support level from its 25-day moving average. The Nikkei fell by 2%. Hong Kong stocks posted their biggest single-day loss in over a year. The Hang Seng Index lost 2.1% and the Shanghai Composite Index declined by 0.2%. Wall Street fell yesterday as the technology rebound lost steam and Walt Disney shares dipped, while investors assessed how a Republican U.S. tax overhaul would impact corporate earnings. The S&P 500 fell for a third straight session. It ended 0.3% lower. The Dow Jones Industrial Average lost 0.4% and the Nasdaq Composite Index dropped by 0.1%. Now for more on the markets, we cross over to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, global markets are very much in the red. It's a very dreary day on global markets, the all-share index being no exception. And it's been dragged down predominantly by Naspers and Steinhoff. Steinhoff opened this morning on the JSE down 62%. Which is extremely dramatic. And this, of course, follows news that the CEO resigned late last night, or at least late last night, and a statement was released to say that he had resigned with immediate effect. That's Marcus Just. And in the meantime, the chairman of the company, Steinhoff, Christo Wiese, is going to be the executive chairperson. So that means he'll be running the company in the meantime. Now, on Monday, the company issued a statement saying that they would be releasing their financial results today, although they did indicate that they would be unaudited. And this did create some panic, and there was people did begin to sell off the Steinhoff stock as a result of that statement. Now, this morning, the company has since announced that they won't be releasing the financial results. And of course, this has added more worry, more panic, and we see the stock down around 57% at the current moment, but at the open it was down over 60%, not looking good. So the question is, what's the future for Steinhoff, which is heavily in debt and has recently been on a massive acquisition trail? We'll get some analysis on that in a moment. And then, of course, Naspers not doing very well. That's partly because of the tech sell-off that we've been seeing globally. But, of course, people still having concerns around MultiChoice, which is a subsidiary of Naspers, as to the shenanigans that have been going on, the alleged shenanigans about MultiChoice paying ANN7 and the national broadcasters money that it shouldn't necessarily have done so on the wrong premise. Also, an American law firm has come out to say that they're going to be investigating MultiChoice's conduct, which is another negative. Let's take a look at the indicators. Well, I'm joined by Michael Trehan. He's a portfolio manager at Vestac. Thanks for joining us, sir.
Yeah, Nompu, wish we were here under better circumstances.
Yes, it's a hairy day for many a fund manager. We know that Steinhoff is a darling of many of you, but we'll come to that very shortly. Let's just start with the global picture. Pretty much all red all round. What do you see as the key drivers today?
Yeah, look, US politics seems to be the central focus over the last 2 weeks. If it's not a tax bill, it's Donald Trump playing geopolitical risk with the Middle East. which does add a bit of complications. But having said that, we've come off a back of a lot of green days in a row. It's been good in general over the last month. So down days are to be expected. US markets down 3 days in a row now, but not anything major yet.
Okay. And then this Bitcoin thing, it's hit $12,200 on the Bitstamp exchange. When is this train going to crash, or do you actually believe in the underlying property of the Bitcoin?
Yeah, so look, I personally don't own it, so I suppose that tells you what you need to know from my perspective. But one or two scenarios are going to play out here. Either this is a bubble and it's going to explode, and that could take 2 or 3 years to explode, or it's deeply undervalued and its price is going to go up a lot. And those are your two scenarios going forward. Which one's which, I don't think anyone can tell you. There'll be a lot of people saying that it's definitely going higher from here, and there's a lot of other people, very clever people as well, saying it's going down from here. So it's likened to going to the casino, putting your money on red, and then hoping that the little roulette wheel does its thing in your favor. Any
message of caution to the viewers?
It's still very speculative at the moment. There's no real uses for Bitcoin. We can see it as the price goes up. The number of clients that phone us who want to buy it increases, and that just shows this direct correlation. People are buying because it's going up, not because they have a need for it. And as the price goes up, we see the sophistication of the investors calling us goes down as well, which is another warning sign. People are buying it because they don't understand what's happening. They're just seeing the price action. Those two things combined generally don't end well.
So that we have enough time, let's get straight to Steinhoff. We know that it's had a bad day, down 62% at the open, results not released as promised. Auditors were not signing off on the results. There's a German investigation into accounting irregularities in Europe. So there are a lot of moving parts to this story. So where to for Steinhoff, and what does it do to fund managers in general, you're a fund manager, who have seen it as a darling and have been holding quite a bit of it?
Yeah, so look, there's been smoke or clouds hanging over the company for the last couple of months as German investigators have been investigating allegations of tax evasion. I mean, that in itself is not unusual. A lot of multinationals do get investigated at some point, particularly in your stricter jurisdictions like Europe. I mean, Apple recently was fined $13 billion, even though the Irish government said we don't want it. It just shows you how grey and vague tax codes are, particularly when you're looking at it between multiple jurisdictions. There's always a loophole. There's always one country refers to something as X and another country refers to the same thing as Y. And those discrepancies accountants take advantage of. So there have been clouds over the company, but the big one is overnight. Mark Schuster, been at the company for 29 years. He's one of the people whose brainchild current Steinhoff is. He's the one who's built it to where it is at the moment. Having him leave says that there's something big that's going to come out. The problem is we just don't know at the moment. Audited numbers or any numbers were delayed, so we don't know what they look like for 6 months. Schuster leaving means that he's leaving because of it's a big reason. I would say a lot bigger than allegations of tax evasion, because that's a subjective matter. This is probably something a bit more sinister, which is concerning. And it looks like fund managers are taking the view of we don't want to wait and see. Let's rather get out, cut our losses, and move on.
Indeed. Now on to Naspers. Like I did mention, the multi-choice thing has caused them a little bit of reputational damage. But to what extent has the depreciation in the Naspers share been, been due to local factors, or is it just because of Tencent and the general tech sell-off?
Yeah, I'd say it's 95% what Tencent's been doing. I mean, you can generally, you wake up in the morning, you see what Tencent's doing in Hong Kong, and then Naspers will do the same thing. So today, Tencent's down 3%, Naspers is down 4%. Add in a bit of currency conversion, a bit of negative sentiment, and that's where you get the difference. But Naspers is very closely tracking Tencent when it was going up and now when it's coming down. And it's a case of, yeah, look, as a Naspers shareholder, I'm very upset about the allegations around multi-choice, and there probably was foul play at some level, and hopefully we get to the bottom of it, and respective executives get chopped and jail time if need be.
Okay, and very lastly, very quickly, why has the Rand lost a bit of steam? It was doing well in the past couple of sessions, now it's lost a bit of ground.
Yeah, look, I suppose negative sentiment. Also, yesterday we did well, so a bit of a retracement. But again, 20 cents here or there is more sentiment-based as opposed to any fundamental movement. Yesterday we had better GDP results than we were expected, so that would have given us some impetus going into today, and that just seems to be reversed now.
Okay, more to ask, but not enough time. Thank you very much for your insights, as always, Michael. Well, that was Michael Traherne. He's a portfolio manager at Vestact, and after a short break, Nzinga has more business news for you.